I'm Neil Esslemont. I head up a small team of people in the Regulator who do this every day of the week, go out and speak at events, as well as engaging directly with pension providers, payroll providers like Sage and others, as well as accountants and IFAs. We've been doing this for 4 years, but of course we're now approaching the point where the smaller micro-employers are going to start staging, in fact from next month. Now, there will be a copy of the slides available for you to download, so to a certain extent these are quite useful to review afterwards. This is a table of contents, if you like, so we're going to touch upon these topics as we go through, but do check the slides out after the event and download a copy. So, what we say to employers is there are some fundamental things you need to do. We believe from our research that most small and micro employers are going to approach their accountant. Perhaps those that already have an IFA involved for their personal finance, they might go to their IFA, but a large number of micro employers are going to come to you for help. What they need to do initially is know when their duties start, because it's still staggered between now and 2017. And if they take their PAYE reference or references, not necessarily the ones that we're using now, but the ones that we're using back in April 2012, if they've changed, and they can put them on our website on a tool, and it will tell them their staging date. In addition to that, we're sending out loads of letters, so you may already have had some clients contact you because they've had their letter with what's called their staging date, and the staging date is the start of their automatic enrolment duties. We would also like them to provide us an email address, a point of contact, so that we can send them out reminder emails. And as their advisor or their accountant, you can also nominate yourself as a secondary point of contact, and you'll get a copy of the emails as well. We'll go through what the duties are in more detail later, but in essence, it's going to mean that people who are normally full-time employees who earn enough in the right age bracket will need to be automatically enrolled into a pension scheme that is a suitable one, because not all pension schemes are likely to be, and if your clients have stakeholder pension schemes, they're probably not suitable. We'll touch on that in a bit more detail later. Much of this can be automated through software, so it may well be that if you're already providing payroll services, if your payroll software can be upgraded to support automatic enrolment, then a lot of this can be automated. And all of the detail you're going to see in a few minutes, you won't necessarily need to remember on a day-to-day basis, because all of those rules will have been built into the software. So it's quite important that your clients and yourselves, if you're providing payroll services, make sure that you know what software you're intending to use for this. And then when you get to the staging date, they will need to start automatically enrolling staff. They'll need to tell their staff what's happening. They'll need to send letters or emails out to those people who are affected. And the one thing we do absolutely ask them to do is to complete a declaration of compliance. That's what they legally have to do. And if they don't do it, we're going to be very unhappy, because we're going to have to fine them, and we don't want to fine anybody. They will also have to keep records for up to 7 years. So let's actually briefly look at the staging date. The large and the medium employers have pretty much all staged. So it's now the turn of the small and the micros. And by small, we're talking about 50 or less employees typically. In addition, from May 27 onwards, any new employer, an employer that didn't exist back in April 2012, will actually stage at some point between May 17 and February 2018. So if a company's only just set itself up, or set itself up from from April 12 or later, then if they put in their PAY reference into our tool, it's like to say, you've either given us the wrong number or you're a new employer. And there's a table that tells them when they're going to stage. Now, they shouldn't guess what their PAYE, they shouldn't guess what their staging date is. They should always refer to their PAYE reference. This is the number of employers who are going to be starting their duty. And we can see that next month, 1st of June 2015, is the first small and micro employers will be staging. And then from January next year, the numbers get very high. So it would be a really good idea to make sure, as an accountancy firm, that you've got your processes in place before January 2016. And in fact, there's nothing to stop the employer from setting up what they need, like the pension scheme, before January 16. We actually recommend that they start to plan 6 months in advance of that date. So that's coming up pretty soon. Now, the duties are a little bit more complicated than simply automatically enrolling all of their staff. Only certain staff will need to be automatically enrolled, but the others will have the right to either opt in to what we call a qualifying pension scheme or to join a pension scheme. Plus, although it's mandatory for all employers, and there are a couple of exceptions which I'll touch on later, but for the worker, for the employee, they don't have to stay within the pension scheme. They can opt out. It's not mandatory for them. And if they do opt out, they can stay out for between 1 and 4 years, but we'll see that a little later. The other thing is you don't need to worry too much about it, but every 3 years this pattern is repeated. So every 3 years the employer will actually need to reassess everybody, including those who may have opted out in previous years, and enroll them. And as I said before, declaration of compliance is very important, as is keeping records, and of course paying the money across to the pension scheme provider as well for the contributions that have been collected. There are a couple of other duties which are really about trying to ensure that employers don't induce or coerce their workers not to join or to opt out of a pension scheme. And because of that, the opt-out process should be initiated by going to the pension scheme provider rather than going to the employer. So, one thing I haven't said yet is, I've said employee. In reality, there may well be contractors who may be considered self-employed who could also come into scope of automatic enrolment. So we talk about workers when we talk about people who are going to be subject to automatically be enrolled. They will need to be between 16 and 74 to get any duty at all. They need to work or ordinarily work in the UK. It doesn't matter if they're full-time, part-time or temporary. So all those casual workers, if any of your clients have them, are potentially in scope. So let's actually look at people who are not employees, because all employees will be subject to the regulation, but what we call personal services workers. This is something that is quite commonly not really fully understood. So the way I normally explain it, anecdotally, is if there's a contractor who looks, smells and feels like an employee, then they're very likely to be considered as workers. But the checklist is actually on this slide. There are no more rules associated with this, and it's really about the employer needing to make a judgment about whether the people who work for them are really under their control and act more like employees, even though they may actually be contractors. The list isn't completely exhaustive. We are expecting the employer to make a reasonable judgment about this, although that may, of course, be a bit more challenging in some cases. There are some people who are excluded. The military aren't affected by this, but there's something called an office holder, and what we're really talking about is the nature of their role, and the contract is that they are not considered workers because they are, for example, elected council members, elected members of parliament, or non-executive directors. There's also another exemption, which is if there's only one employee in a company, and that employee is also a director of that company, then they are exempt for as long as they are the only employee. In addition, we had some new regulations that came in this April, which introduce a few more exemptions. If someone is actually in their notice period, or they have HMRC fixed or enhanced protection status, or they've previously ceased membership of qualifying scheme, then they will potentially be exempt as well. But it's the employer's choice as to whether they actually exercise this option. Sometimes we get agency workers who effectively are recruited by one firm and then, if you like, sold on to work full-time for another firm. And in that case, it can be a little bit unclear who actually is the employer and who has the automatic enrolment duties for those people. First of all, if they're employed, it's quite straightforward. It's whoever's written on the contract. Similarly, if they work directly for one company, even as a contractor, it will be on their contract. But if they are referred out via an agency, then it's who pays that individual. So if your clients, for example, have some contractors, but they're provided by the agency, and your client pays the agency, and the agency pays the workers, then it's the agency's responsibility. However, if your clients pay them direct, even though an agency may have found them in the first place, then your client will have the responsibility for them. So we said that people between 16 and 74 come within scope of the duties, but that doesn't mean they're all going to be automatically enrolled. So in fact, it's only people between 22 and state pension age, who we call eligible job holders, who need to be automatically enrolled into an automatic enrolment pension. Those people who either earn a little less than the earnings trigger of approximately £10,000 per annum, or they're older or younger than 22 in state pension age, those people are entitled to opt in to an automatic enrolment pension scheme. So even though they won't be automatically enrolled, they can join the same pension scheme. These schemes, the employer will have to make contributions to, and we'll look at those contribution rates in a little while. And then finally, those people who are so part-time that they actually earn less than approximately £5,800 per annum, they can say, I'd like to join a pension scheme, but it can be any scheme you like. It can be one of those stakeholder schemes that they may have. The employer doesn't have to make a contribution. Now, I said approximately £10,000 is the threshold for automatic enrolment. It's not, in fact, what they earn in a year. It's what they earn in the pay period. So if they are monthly paid, then it's £833. So they only have to earn £833 and a penny 1 month. They've triggered automatic enrolment. Doesn't matter what they earn in the year. Similarly, if it's a weekly paid person, it'll be £192 and a penny is the trigger. If they get that once in a week, they've triggered automatic enrolment. Now, the assessment process itself is best automated. The earnings that are assessed are called qualifying earnings. And if you look at this definition, which is salary, wages, commission, bonus, overtime, and some of the statutory payments, but not things like expenses and dividends, we know some people are looking at NIable pay, and that may well be the same as qualifying earnings in many cases. But the software that you use will expect you or your client to configure which earnings are qualifying and which are not. And then the software will take care of identifying those who are eligible job holders. Now, on the staging date, all workers will need to be assessed. And then from the staging date onwards, all new joiners will need to be assessed. And then, as I said before, every 3 years, you'll have to assess all the workers again. But there are some workers who need to be assessed every pay period. Now, for some micro-employers, that's not likely to happen because it's really those people who are part-time, who are the entitled workers and the non-eligible job holders, because until they trigger automatic enrolment, you assess them every single pay cycle. And then once they've triggered, they'll be automatically enrolled. They'll either be in the pension scheme, or if they opt out, they'll be left until the next re-enrollment date between 1 and 4 years later. Now, there is something called postponement. Postponement does suspend the duty to assess and automatically enroll a worker, or as many workers as they like, because you can do this to the entire workforce if the employer chooses, but it doesn't change the staging date. There's a myth out there that says, I'm going to apply 3 months postponement at my staging date, I don't have to do anything. Well, actually that's not true. They will have to issue a postponement notice to the people who are being postponed, and they still really need a scheme in place because they could say, I'd like to opt in. So the staging date is not changed by postponement, but what it means is that, and the software will take care of this automatically, is once postponement is applied to a worker, you leave them alone for between 1 day and 3 months, and at the end of postponement you assess them, and if they are an eligible job holder at that point, you have to automatically enroll them. You can't use postponement again at that point. But if they're not, then you would monitor them and look every pay period that follows, and if they trigger again in the future, you can apply postponement again in the future. Now, I said that it's really important that you know how you're going to carry this out. So payroll can do it. Not all payroll systems in the world, however, have the automatic enrollment capability, and there are other people out there who can provide these assessment services in software, including pension providers themselves. So some pension providers can actually carry out this assessment, but it would mean you'd have to send a file across or upload a file with all the pay information for those workers, and then you'd have to download the results, and then you'd have to feed the pension contributions back into payroll. So it is a little bit more of a complicated process. Now, we talked about suitable pension schemes. There are actually really 2 types of pension schemes. There's a qualifying pension scheme. It's probably less likely that any of your clients will have people who are in existing pension schemes where they are qualifying, but it's possible that those schemes might be made qualifying. So to be a qualifying scheme, all it has to be is registered for tax and meet the minimum criteria for contributions, which at the moment is 1% from the employer and at least 2% in total, and we'll look at those percentages in a second. However, you can't automatically enroll someone into a scheme that's just qualifying. It's only for existing members. So there are some additional features for an automatic enrolment scheme. It's drawn around the outside because an automatic enrolment scheme must also be qualifying, must meet the same criteria for the minimum contributions, but it also needs to be registered in the UK or the European Economic Area states, and there must be no barrier to automatic enrolment, which means that the person doesn't have to sign anything, doesn't have to do anything. They'll be automatically enrolled. They'll be put into the default fund, and they don't therefore have to make any choices. And if it doesn't have a default fund, for example, then it won't be an automatic enrolment scheme. Those entitled workers, those very part-time, low earners, they can be put into any scheme that is registered, although many employers are actually putting them into automatic enrolment schemes because it's maybe easier only to have one scheme. Contributions. 1% from the employer is the minimum. They can do more. 2% in total. So if the employer only puts in 1%, the worker, the employee, has to put in the other 1%. But October 2017, the numbers go up. It'll be 2% from the employer and a total of 5%. And in 2018, it's going to be 8% from in total, of which the employer has to pay 3%. So existing pension schemes. I'm going to leave you really to have a look at this when you download the slides. But in essence, there's a very good chance that any existing scheme, like a stakeholder scheme, won't be either qualifying or suitable for automatic enrolment. So really the key message is, if they have any intention of trying to use an existing pension scheme, they must check that out with the pension provider. Now, here's a potentially hot topic. Under the Finance Services and Markets Act 2000, giving advice to an employer about which pension scheme to choose is not regulated. However, there's always the risk that you could stray into giving investment advice to an individual who owns a business who will end up putting their own money into the pension scheme. Or, of course, you could end up giving advice to their staff, and you need to keep away from that unless you happen to be licensed as well. We would also say that we don't really recommend, if you're not really confident about your level of skills and knowledges about pension, really you should stick to giving them facts. Don't express an opinion, but by all means steer them. It's the employer's duty to choose a pension scheme. If you know that there are some pension schemes out there that still take small and micro employers, then by all means point them in the right direction. Now, over 90% of those that are going to be automatically enrolled are very likely to stay in that default fund for their entire membership. So when the employer is actually looking at how do I choose a pension scheme, what are the important things that I should be looking for, one of them is to see the range of services the pension scheme provider can provide, including how good and how much value for money the default fund will be. Now, there is a government set up pension scheme that has a public service obligation to say yes to any small and micro employer who wants a pension scheme, and that's NEST, the National Employment Savings Trust. However, there are lists of pension providers on the NAPF, the National Association of Pension Funds website, and the ABI, and amongst this slide handouts, there's at the back useful links, and their website will be there with the URL. So one thing though is that not all pension providers on those lists, or all pension providers out in the marketplace, will want to offer a pension scheme to a very small employer, particularly perhaps if those workers are not earning very much money. So that's something to bear in mind, and it's a reason to say get that pension scheme in early. So opting in, even though an employer can use postponement, a person can ask to opt in or join a pension scheme at any time, including postponement. So even if they've used postponement, they may need to handle an opt-in request. And the software should take care of the assessment, so there's no real difference. The worker won't know whether they're an eligible job holder or an entitled what's it. They will just say, yes, I'd like to join a pension scheme. They will be assessed the next pay period by the software, who will then say, actually, they need to go into an automatic enrollment scheme where the employer will need to contribute, or actually, no, they can go into any scheme because they're only an entitled worker. Opting out, as I touched on before, there will be a 1-month opt-out window. So any worker who doesn't want to stay in the scheme, in the first month, starting from the latter of 2 dates, meaning they will have had to have been enrolled and they will have had to have been given a letter or an email telling them that they've been enrolled. So they can't opt out in advance and say, oh no, I don't want any of this. You've got to wait until they're actually in the scheme, and then they've got 1 month to opt out and get a refund. But if they opt out later, then it's the scheme rules as to whether they get a refund or whether they have a small pot that they can potentially transfer to another pension provider if they so wished. Communicating to workers, in addition to telling these workers that they're being automatically enrolled, those who are not being automatically enrolled do need to be told that they have the right to opt in or join. So potentially every worker will receive a communication at the staging date, unless they're already in a qualifying pension scheme, because if there's anyone who's an active member of a qualifying pension scheme, they don't need to do anything with them. We do have letter templates on that website, which gives you the 4 common letters that could be sent out. And you may also find that their pension provider may also have letters that they may prefer to use. If you are going to, as the accountant or the payroll bureau, send out letters on your employer's behalf, that's fine. We see there's no reason why you shouldn't do that, providing you don't start adding things into the letters that are over and above the key statutory information, just to ensure that you're not being considered to do a financial promotion. So if you took a standard letter and then inserted, by the way, if you want to join this fund, it's a really good deal, that would actually be considered a financial promotion, so don't do that. How are we doing on time? Not so bad. This is the 3-year re-enrolment, and it's, at the moment, a relatively long way away for most of your clients, but really the key thing is that those that have never triggered automatic enrolment or have never been in a qualifying pension scheme and an eligible job holder, they need to be monitored every pay period. Everyone else can be left until the next re-enrolment. Record keeping. The software hopefully should keep records for the employer, and most records need to be kept for up to 6 years, but things like opt-outs should actually be kept for 4 years. Now, the employer only has to inform us of anything every 3 years. At their staging date, they'll need to do a declaration of compliance, and every re-enrolment date, they'll have to do a declaration of compliance. Everything else, just keep a record. If we ever have any grounds to go and do an inspection, then we could well ask to see these records, and that's why it's quite important that the employer has them, particularly if for any reason we were alerted that there may be something that's gone wrong through a whistleblower. The declaration of compliance deadline is 5 months after the staging date and 2 months after every re-enrolment date, and the employer shouldn't complete the declaration until any postponement they may have applied have come to an end. So really what we're asking for is tell us what happened at staging, but tell us after all those postponements you applied have finished and you've then done the assessment, and tell us how many people they've automatically enrolled and how many people they didn't automatically enrolled. It would be a good idea to make sure that whoever's doing the declaration of compliance is familiar with it. We have come across cases where the employer thinks you, the accountant, might do it for them, and you think it's their role. So just make sure that if you are going to do the declaration of compliance for them, they know that, and if you're not, they know that, so that it doesn't fall between the cracks. You can start the declaration process early and fill in all the information we need about the pension scheme, for example, and then complete it when you're ready to complete it. We have on our website a planning tool. This is very popular. What it allows either your clients to do or perhaps you to do if you're helping them do this is to start that planning. So they'll put in either their staging date or their PAYE reference, which will generate the staging date. And if you click on each of the tasks down the left-hand side where the little plus signs are, it will show you a little bit more information about each task, and you can step by step go through it. And it shows you with those red dots when you really need to complete those timelines. And it shows you how long you've got before your staging date and your declaration of compliance deadline.